Welcome friends to the I Can Trade channel. Today we will discuss a very important factor which mostly novice traders tend to ignore, which is the overall structure of the market. They buy a stock which is moving up and all of a sudden the price reverses, or they sell a stock and it reverses, hitting their stop loss. You need to understand that just by looking at the price alone, you cannot take any view or decision to trade. Price has to be viewed in terms of the overall structure so that you are aware at what level the price is at and is it a good opportunity to trade. I'm sure by the end of this video it will definitely help you in making the correct trading decisions. So in today's video we will be discussing about structures, their importance. Then as you are aware, there are two kinds of structures. One is a trending structure, which can be an uptrend or a downtrend, and the other one is a range bound or a sideways market. We'll also look at the best levels to trade, and we'll also take a few examples to understand it better. As you know, there are three types of structures which we already discussed. In an uptrend, the you have a formation of higher highs and higher lows. In a downtrend, you have a formation of lower highs and lower lows, and the same continues. In a sideways structure, the market is in a range and it moves, price moves from the top of the structure to the bottom and vice versa. Now in case of uptrend, what are the major key levels which you should look at? There are two levels which we should look at. The first one is the breakout level and the second one is the lower high which is formed after the price breaks out. Whenever there is a breakout, you should wait for the price to retrace. Normally you will see the price retracing to the breakout level, taking support and moving up. You will also see a scenario wherein the price does not take support at the breakout level but retraces to the new high low which has been formed after the breakout has taken place. So in this case, if you see, it is kind of a double bottom pattern. So in this case, the price has not reversed, right? Let us look at a couple of examples to understand this better. This is an example of SBI Life. You see, this was a resistance level which has formed. The price breaks out and creates a new higher high. Then the price retraces towards the breakout level, takes support from it, makes a bullish candle and moves forward. In the second example, this is of Tata Steel, where you can see the similar pattern. Price was taking resistance at this level, price breaks out, moves up, then comes back to take support at the same breakout level and then moves up. This is an example wherein the price takes support at the new high low which is formed after the breakout of the structure. In this case, in case of Fortis, you can see the price moves out, retraces, but doesn't take support at the breakout level. It comes down to the new high low which has been formed, takes support from it and then goes on to make a new higher high. In this case of EL, this is a 1 hour chart. You can say the price has moved, has broken the level, moved up, tried take support at the breakout level but did not sustain, went down. Then it took support at the high low level and from then it again continued its journey upwards. Now in case of a downtrend, we have the same two levels which are important. First is the breakout level. Price is making lower low, lower highs, lower low, lower highs. In this case, first is the breakout level from which the price has broken, was taking support. Now it has broken that support. So we have to wait for the price to retrace to the breakout level or the new higher low which is confirmed after the price new lower high which is confirmed after the price makes a new lower low. So if you look at charts, this is a chart of LIC Housing Finance. You see this was a key level in the market. If you can see, price has been taking support once, twice, thrice. Fourth time it came, it broke the structure. But then after breaking the structure, what this becomes the breakout level, and this becomes the lower high which has been formed. So the price retraces, it doesn't take resistance from the breakout level, moves up to the lower high level, and from there it takes resistance and then continues its journey downwards. The next example also where the price has taken resistance from the lower high level. In case of Reliance, the price was taking support at this level, price breaks out, then it comes back to the breakout level, and now it is again going down. Now in case of sideways structure, there it's very simple. There are just two levels which we look at. First is the lower range of the structure, and the other one is the upper range of the structure. And you can clearly see that if the come when the price comes to the lower end, we will look for buying opportunities, and when the price reaches the upper end of the structure, we'll look only for selling opportunities. Let us look at a couple of examples for this. CAC, as you can say, it is in a sideways trend, going taking support at the lower end of the structure and taking resistance at the higher end of the structure. In case of escorts, you can see the same thing happening, taking support at the lower end and resistance from the higher end. Now, just to recap, in an uptrend, we'll look for trade opportunities only at the breakout level or the new high low level formed after the breakout is confirmed. In the downtrend, look for opportunities at the breakout level when the price retraces to the breakout level or the new lower high formed, which gets confirmed only after the breakout. In case of a sideways market, look for buying at the bottom of the range and sell opportunities at the top of the range. I hope this video has given you a clarity on what levels to look at to trade. And in case you like the video, please share and subscribe. Thank you.